is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To begin a great relationship, know what you want. Know what the needs of your body are and what the needs of your mind are and what fits well with you. There are millions of men and women, and some of them make a good match for you and others won't. The two of you only need to be a key, like a key in a lock, a match that works. Market-wise, let's take a look at it out here. We have the Dow Industrials down 567. NASDAQ is trading down 226. S&P's off 70 bucks. Gold contract up $4, trading at $11.95.50 an ounce. You have silver down 8 cents, $14.32 an ounce. Light sweet crude taking a hit, down $1.85, $73.11 a barrel. Notes and bonds. You get the 10-year note down 1 tick, 117.25. 30-year bond off 13, 137.10. And King Dollar. King Dollar down $1.66, trading 95.180. The euro is at 115.25 to $1 US. The yen is out here at 112.52 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Well, all the major indices, folks, they're all in confirmed ABC structures on the way down. And what a confirmed ABC structure on the way down is, it means that you've done the first leg, A to B. You had the counter trend bounce, and that's what we had yesterday, and it was anemic yesterday. It's pretty amazing, actually. And then you blew it out today. So if you have my book, The Art of Time in the Trade, bottom line, you can check it out, see how these things work. This is the first time that we've had ABC structures down in the marketplace. I mean, in so long. It's pretty amazing. And these are serious. We take a look at the SPY. SPY's blowing apart its B point. The B point had 87 million shares. You're doing 122. Now it's going to get intriguing here, and this is what you're going to be able to gauge what the other indices are going to do. The SPY has already done its 1-to-1 ABC down. That projection was $281.15. Well, on an A to B equals C to D, you can do a 1-to-1, which is if you go down 10 points, next time you go down 10. You can do a 1 to 1.382. First leg 10, next one 13. You can do a 1 to 1.50. First leg 10, next one 15. You can do a 1 to 1.618. First leg 10, next one 16.8. If you do a 1 to 1.618, folks, that most times immediate turn in the marketplace within a couple of days. SPY has reached it. Bottom line, is it going to stop here? Well, if we pull this back and put this on a weekly, you take a look at it, what you have now is this. And this is going to be all about the February 9th swing low that the indices haven't hit, that they're going after. Inside the SPY, we're 280. I expect what we're going to see here, you're going to go to 275. 275 is the high of the week of February 9th inside the SPY. We take a look at the NDX 100, the 3 Qs. 3 Qs right now, they're trading 173. That's blowing its B point apart. B point out here, even conservatively, 83 million. You're at 79. It's going to end up doing 100 million. You're at 173.71. Your price projection there is 170.42. We bring this back set this up on a weekly, and what you're going to see, the highs of the lows is actually 165. Now, when you put this together, this is how this shakes out. And this is what's going to be cool about where the SPY is right now. If the SPY does continue down to where I was just saying that the highs are the lows, what you will get, this NDX 100 will be here in a heartbeat on the way down, because what that is saying is that it's going to be more than a one-to-one ABC structure down in all the indices. We go over to the IWM. The small caps are the largest ABC structure on the way down. That's because their first leg was so dramatic. It's blowing away the B point at 31 million shares. We're already at 31 million. You're at 157. 151.47 is the number on a one-to-one. Now, if we take this and we put this up, what you're going to see here is this. This is where it's going to get really dangerous. The high of the low of February 9th is 153. This is 151. This baby's going right after it, folks. Sad but true. And these high volume lows, high volume highs, they want to get hit, take a long time? Yeah, it did. But guess what, man? You're going after it. Pretty intense, no doubt. Gold contract. What do we have with the gold contract? Gold contract still can't catch a bid. You're up $5. That's good. It's better than being down. Bottom line, you're going to need some volume behind that move. We've done 230,000 contracts. We're at 1196. I do expect it's going to basically make the run for this 1213 again. 1218 to 1220 is the area where the sellers are still lying inside the gold market. Now, we'll see how that shakes out with this type of downdraft. Oil's down 2.5%. We take a look at oil. Oil also is coming down with volume. Bottom line, they're taking all the indices apart, including the oil market. Oil will have to get back inside $71. Right now, you're at the 73.11. King dollar. What do we have with King dollar? Well, and here's the divergence, and it's pretty intense divergence. King dollar, bottom line, yesterday got sold down. Let's see, there we go. DX8. Okay, so King dollar tried to get the higher price. Couldn't handle it yesterday. Bottom line, rolls over. The volume's not that heavy. You know, the 95.070 is the number to get back inside the lower range. We made it to 95.05 today, so it's going to get intriguing watching this shake out. 18,000 contracts, though, of light contract volume on the roll. The differential is that this is actually a roll. What a roll means is this. If you take a U and you turn it upside, you take a horseshoe, just turn it upside down. When you get to the right-hand side, if you're actually looking at it, you get to the right-hand side, most times that stays very slow, and then, boom, just drops out of bed. And that's what I expect we're going to see inside of the dollar index as we move forward. Some of the higher volume equities out here, you get Advanced Micro down $1.96. Microsoft off is $4.40. You get Apple down $6.30. The door is always too small, folks, when the crowd wants to get out. And, you know, bottom line is that what you have happening here is this. The funds, they're trying to get out as fast as they can, because guess what? Whoever sells out, gets delta neutral, could still be up for the year. You don't have to go too much further, that they'll be flat or down for the year. And that's what these large funds are looking at right now. Coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 620. Which is a 2.5%. NASDAQ, folks, that's quite a beating here. That's down 3.1%, off $240. If we go over to that composite and we take a look at the composite, composite right now, bottom line is that you're talking about in 6 days, the composite just came all the way back to June 1st. So there's some heavy destruction that's going on here. The composite's going after its swing area from the 23rd of June, which is at 74.19. And it doesn't, I don't expect that we're going to let up here. And this is why. So watch this, folks. What we haven't got here, right, you got one downtick. You need a couple monster downticks, meaning panic selling, and then you need a rejection. And thus far, we've only got one downtick. It's a good one. It's, you know, minus 1497. Now, that's a big downtick. Specifically, what that means is that you had the market selling off simultaneously within 1 minute on a downtick. I mean, you get the bid and the offer. When you're selling off on a downtick, they're selling off on the bid side and saying, just get me out. But if we take a look at the trend, what you're going to see inside the trend, guess what? There's still buyers out there, and they're getting smoked. Bottom line, the trend right now is running out at 0.97. A 0.1 or 1.00, okay, is a balanced market of buying and selling. So, you know, the dip buyers are here. The difference is that they're just getting basically taken. And, you know, I can picture that, you know, we haven't seen something like this for a long period of time. So, you know, I can understand it. But bottom line, get out of the way. You get the VIX trading out at $20.28. And as I said, I think the bigger issue that the market is dealing with now is this, is that you have 68 trading days left to the end of the year. Market-wise, there's plenty of managers that are up good. The real question is, do they go delta neutral, clean up the deal, say, I'm out of the market, at least if some of these guys and women can't get out of the market, but they could go delta neutral, meaning buying the insurance, and they're going to pay up for it inside the option market right now, but they can do that, flatten out their portfolios without selling, but flatten them out. You know, they fluctuate either way. They come into the end of the year, they're winners. The market keeps going back down, they're going to be heroes. Bottom line, market goes up, how much is going to go up? That's the equation I think that's out there right now. So it's pretty intense. There's no doubt about that. Tesla, we do take a look at Tesla. it looks like Tesla right now is trading down $4.83, and that's not bad in the context of, there's an article out here today. Well, they're closing on, there it is. Musk has 143 days, 143 days. That's how much time Elon Musk has till big bills start coming due in the debt market. That, in truth, wouldn't be considered a ton of time in most circumstances, but in 2018, with capital markets still minting bonds and loans by the trillions, it's still relatively complete runway for a company like Tesla to secure a financial reprieve. Well, that would be the case if, in fact, these markets don't keep cratering like they have been, because what you do have, folks, is that markets change very quickly. And if, in fact, we are in a major correction, which I think we are, and you keep going south, what is going to basically the refinancing will be out there, because there's so much cash out there. It'll still be out there, but it'll cost a lot more money to refinance that debt. We go inside the NDX 100. We take a look at the strength versus the weakness. You have Netflix is down 6.7%. Fastenal is down 6.7%. You get Intuit off 6.2%. Align Technology is off 6%. We take a look at the point-wise big numbers. You get Amazon down $87. You get Bookings.com, which should be Priceline, down $80. Google's down 38. You get excuse me, Boeing is off 15.5. Illumina is off 15. Big numbers out here. Inside the Dow Industrials, the strength versus the weakness. You have Nike is down 6%, Boeing's down 4%. In fact, there's only one equity that's up inside the Dow Industrials, and that's Home Depot. And unfortunately, that's up because of the fact, folks, that coming into the Panhandle in Florida, we're having a very monster hurricane, and send some good white light, a lot of prayers for those folks up there, because they're going to need it. This is a monster. In fact, they were saying that for that area, this is the largest hurricane since like 1858. It's a big number for that area, and there's not much protection in that area when that thing is barreling, and I believe it's barreling in like kind of right now, right as we're talking. 877-927-6648. Let's go take a look at the GDX. Bottom line is that the GDX wants higher price. You know, rejected $18.14 today. It's at $18.62. And man, Tom from Plymouth, he was calling Tommy and myself this morning, and it's pretty neat because when he was calling, we were talking about that it was testing right at that swing area, and bottom line is that that's exactly what it did. The first 10-minute bar had 1.7 million shares. That was at 10:10. And then at 10:30, when Tom was calling, 10:40, it was 1.1 versus 1.7, and it rejected lower price. From that point on, went from 18.14 up to 18.62. We'll see where that shakes out. We go take a look at the ABX. ABX out here, bottom line, this is taking over Rango Resources. Now, this is caught a bid. I like how this is trading, man. It pulled back to strength. We pulled back with 12 million versus the strength of 26. We take off again with 16. That says it wants higher price. And with ABX, if ABX, it looks to me like ABX actually can get up to 13.55, which is the high. And if we get that, bottom line, we just may catch a real bid inside of the gold market. We haven't caught one physically in physical gold. Haven't caught one equity-wise. They're off the lows, but we haven't caught a real bid. The XAU is trading up 68 cents, $65.56. That also rejected lower price today. Has juice behind the move, heading higher. Gold Bugs Index, same type of setup. Gold Bugs Index rejected 139. You're at 143. Higher prices are getting in that market. The real question is going to be, is there going to be a shift? And one thing you want to remember, folks, about markets in general. When we went south, and this is the yin and the yang of markets when they go down too fast. When we went south in 2008, there's plenty of folks that thought that gold would go a lot higher. Well, it didn't. Gold went from 1144 to 666 in about a heartbeat. Okay, so You know, I'm bullish gold, but I want you to understand that, okay? Don't think if you just hear that, oh, people are getting in the market because it's a safe market. There's no such thing as a safe market. That's the bottom line. Stock markets, currency markets, any type of market, safe is the wrong, you know, word to use. You can, probability-wise, awesome. I think it's definitely trading differently than it was then. But the bottom line, keep that in mind. It's going to be all about the good old U.S. dollar. And it hasn't failed yet. But bottom line is that there is a seller in that dollar. We take a look at the commodities. You had gasoline is down 3%. You get crude off 2%. Copper's down 1.5%. We get silver down 0.5. Natural gas is flat. Gold's up 0.3. Orange juice up 0.9. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 553. Nasdaq is off 221. S&Ps are off 67. Let's go over and we take a look at the good old cannabis stocks, folks. They are on the move again. They shook off. They were all in the negative out here this morning until Altria, bottom line, well, you had a story saying that Altria is looking to basically get into and invest in one of the cannabis stocks. And then this APH, which trades in Canada, Bottom line, this went topside from $16.70 up to $20.22. And let's see what they're saying here, actually. Okay, so I see. So this is the Globe and Mail, you know, saying that Altria is in talks to buy a stake inside one of those large companies in Canada. And this, let's go pull this up. So when we look at the numbers on, oops, well, Altria. So this is good old Philip Morris, M.O. And this is the killer company, there's no doubt, man. Pretty sad, actually, that they're going to not get in the pot business. Bottom line is that, so they take in $20 billion a year. Tobacco, they do $24.4 billion. Oh, that's interesting. That's 2017. These numbers don't add up. They're saying the revenue is more than the actual total revenue. Well, I'm not sure how that works. 2017 revenue, they're saying is $24 billion, but yet they only took in $19 billion. Bottom line is that it is one monster company. There's no two ways about that. And what I do expect you're going to see, you know, Constellation Brands was the first one in there. No doubt this the smartest one in there. So let's go to Mark in Bedford. Hey, Mark, what's going on?
Not much, Tom. You guys safe with that hurricane right off your coast?
We're lucky. Yes, we are. It went by us along, you know, about 4 hours ago, and we just got pelts of rain, you know, a few bands, but not. It's the folks up at the Panhandle that really have some big problems, huge problems.
Well, I was watching CNN during lunchtime, and boy, it's a lot of white light for those people up there.
No doubt, no doubt.
Tom, I had a quick question, and it applies to both the NASDAQ and the Dow and the S&P. We've come down so far so fast today. Will there be a half day or maybe a one-day bounce before we go lower? What my strategy here, or the point of the question is, would I maybe in the pre-market tomorrow morning maybe go long and then sell up midday or maybe right at the open?
I wouldn't be going long.
You would not, okay.
I would not. And that, you know,
okay.
It's great you just brought this up, though. See, because this is what has happened, right? When I just brought this trend up, this is what's going on. People are going long. See this trend right now? The trend is at 0.99. A one trend, folks, means that there's just as much buying as selling, and that is so dangerous it's unbelievable. Okay, so many folks are used to basically buying the dip. They're still buying it, but guess what? They're getting overwhelmed by large funds that are getting out. And what I suspect what's also happening, and because we haven't had a downdraft in so long, we still have more ETFs than we ever had, folks. So it's always the chicken and the egg. So if you understand the structure of an ETF, what ends up happening is that you have equities that start selling. Then the ETF sponsors have to sell. They sell, the ETF sponsors sell, all the equities get sold down. It's a disaster on the way down, and that's why you're seeing this go so fast, man. Because, you know, you've heard me say this before, Mark. Folks, when the QQQ went public, I had the vice president of the American Stock Exchange on when I was doing this program out of Waltham. I remember this day so well. And then I remember what happened in the 2000 deal. When we were going downtown, people couldn't understand why I went down so fast. And what happened there, and that's when we only had the SPYs, we had the Qs, we had the IWM, and I think that was it. But that's what it was. And that's what you're seeing out here right now. You're seeing that well, here, if we go over there, I'm watching it in the XLE, too. See, it's happening in the XLE. They sell the XLE, you know, bottom down 2.5%. I mean, $2.50 like in about a heartbeat. And what that is that the weighting structure has to do with the aspect of ExxonMobil and Chevron. What you sell ExxonMobil, Chevron, they got to sell the XLE. You sell the XLE, they got to sell Mobil and Chevron.
So Tom, here's the point to my question. You always talk about energy, and we've come down so fast, so far. That's why I brought up the question.
No, I'm with you. I'm with you. But okay. So my point is, if that trend was basically, you know, not at one, I would say that, yeah, you're going to get a bounce. When the trend's at one, you're not going to get a bounce. You might get a flat market tomorrow and you might take a rest. because this is a huge amount of energy. But people are buying, man, and they're getting killed.
Okay.
Cooking, brother.
All right, my friend. Thank you.
Have a great one, man. Have a safe one. Let's go to our man Jim in Palm Harbor. Hey, Jim, what's going on?
Hey, how are you today?
I'm doing great, man. Yourself?
I'm doing fairly well. My question's kind of like what your first caller there was. I was wondering if this would classify as a capitulation day where everybody just gets out and the market kind of gives up. Okay, so watch. And I'm glad you called. And I saved this for you and for everyone else. That's why I did it, because Mark was asking the same thing, no doubt. And I got into the aspect of the trend. So what happens at bottoms is this. Well, first off, what we haven't done yet is this. We have ABC structures on the way down. We haven't finished them. You know, the small caps are at 157. 151 is the number. If we take a look at the Qs, the number on the Qs are at 173 or at 170. So first off, you have to get down to at least a 1-to-1 structure. Then what you need in order to get to a bottom is that you need this trend, okay, bottom line exploding up somewhere like a 160, 170, you know, in a huge way, even a 2. Because what you're going to show there with the trend gauges is this, folks. It'll show that all the same stocks are getting sold at all the same time. Then what you need is that we need an additional downtick. We got a large downtick today, and we got a minus 1497. What that means is that within 1 minute, everyone was selling on the bid, and each downtick, they didn't care. They keep selling, selling, selling. Most of the time, well, not most of the time, you need 2 monster downticks. And then what you're going to need, Jim, is a rejection of lower price, and you have none of it. You know, just step away, man, and get the stops in, because my take is that we'll go into this February 6th swing low, and that's a vicious number, man. But guess what? The equities, a lot of the equities already did it. The small caps are going to be the first one down there. And if you want to take a look at something that's really disgusting, folks, if in fact we go there, what you're going to see, and I've done this long enough, man, and if you have the out of time in the trade, high volume lows, high volume highs get tested. And this thing is sticking out like a sore thumb. And on the S&P, you're at 252. And we're at 279. So, Okay.
You know.
Well, I appreciate you.
Okay, brother.
Thanks for the call.
Thanks so much, man.
Have a good.
You too. Stay right there, folks. Come right back. We have the Dow Industrials right now down 660. S&P's off 257. No, S&P's are down 79. NASDAQ off 257. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Is that you have these other ETFs that are making their way into that high volume February low. So if we go to the SMHs, you're going to see the SMHs right now trading out at $96.74, and that high volume low is $93.88. You know, bottom line, you're going after it, and I expect you're going to basically hit it more than likely tomorrow. Once you got into the high of that, which is 103, which we dug into 4 points today, the low is game. And bottom line, that's just how these babies like to work. Let's go over to HACK. Let's see where this is. This is let's see, cybersecurity ETFs. This baby right here is trading $35.99. And let's see. Oh, that's got a long way to go. Oh, this is dangerous, man. See, some of these are really dangerous, like how far they're down. This is, we're at 35. The high of the low is 32. The low is 30. That's a long way down, man. That's a long way down. The XLE, we take a look at the XLE. You know, the XLE was, bottom line, saying that this oil market was going to pull back. It was kind of strange that the XLE just couldn't go to higher price when we had oil at the $75 mark. Where the XLE was having a huge problem was in the downdraft of May. Yesterday, it made its last hurrah, just couldn't do it. Comes off that baby, has volume as it's coming off of it, and the XLE is going to stay in the large consolidation that it's been in for quite some time. You know, the bottom, the lows of this consolidation is 64. The high was that 75, right where we're at, 70. You know, and the XLE just loves consolidations. That's, if I've found out anything, that the oil and gas equities in general, folks, they love doing monster consolidations. If we do go take a look at the, let's go look at this S&P intraday. So when I started the program, we were talking about that the SPY had already reached its 1-to-1 ABC structure on the way down. And that being said, you know, bottom line, when you put this on a weekly, what you're going to see how this is being set up. My take is that we're going to go to the high of that February low. And the high of that is 275. Right now you're at 279. You know, we hit 278. So you're going to barrel into that with some real power. And real question is going to be how much more cause is going to have to build to get to the low of that. If we go over to the diamonds and we take a look at the diamonds, what you're going to see with the diamonds, these babies are down with 10 million shares. We put this back, and the diamonds, okay, so here you go, man. This is pretty intense. So the diamonds are right next to the high of the low of February. 255.02 is the number. We've hit 256. And when you slam into something like this, folks, this is going to be pretty intense, because if, in fact, you get there before the end of the year, that is going to put that indice at a flat market for the year. And that's where I come back to the aspect of money managers getting out, how fast they're getting out, because they're sitting there saying, hey, man, I already made bread for the year. What do I got to do? I got to go delta neutral. And just so you know how quick you can go delta neutral, folks, if you're watching Tiger TV, and I have a Bloomberg, what happens is that they have their portfolio in the Bloomberg, and you press one button, and one button turns around and tells you exactly how many S&Ps or NASDAQ or small cap puts or calls you got to buy in order to go delta neutral for an amount of time. So it's a very easy deal to do for professionals in this business. And that's just saying, you know, you're dealing with the Bloomberg. If you're a large fund, they get a lot more than a Bloomberg that is going to basically let them know how they can go the fastest for the least amount of money to go delta neutral, you know. Some of them will just sell. A lot of them will go delta neutral. Bottom line is that you can see the selling is out there. If we go take a look at the volume as we're coming into the closeout here, you get 669 million inside the NYSE. We take a look at the NASDAQ. The NASDAQ's going to be a monster. Yeah, you're already at we're already over the NASDAQ. The NASDAQ will end up doing 3 billion shares today. We're at 2.484. And what we did have is that you had the small caps jump the creek on their 200-day moving average, which is very dangerous. The composite is going to close underneath it today. That's going to be a big heads up. There's no doubt. Now, I want to show you something in the small caps, because this is unique in the aspect of the last 3 to 5 years. The small caps, it's gone under the 200-day moving average, right, in the last few years, but just barely, and it only lasted a day. When you take a look at this break here, this break is a monster, folks. This is wide price spread, big volume. I get this back 2 years right now. In fact, let me take it back 3 years so you can see. You take it back 3 years. The last time we were really under goes all the way back to December of 2015. That's the bottom line, you know. So it's a problem, you know, no doubt. The metals, we got a question about the metals. Bottom line is that the metals need more juice. You know, the good news is that you know, they haven't crashed the gold market. The good news is that they're buying gold equities. I expect that's going to continue. That's the way this seems to be shaken out. What we need is this: if you are in the metals market, we need that dollar to head lower. That's the bottom line. And what's intriguing here is this: is that fundamentally, the rates went up very quickly. That's what started this deal down. That should have put the dollar to the moon, because fundamentally, that's how that works. You get higher rates, you get stronger currency, all of the above. But that didn't happen. What ended up happening is that every time it's up at about the 95.50 mark, they keep selling it off. Okay, so now watch this scenario. This is where this can get interesting. Now, you get a market that keeps going south. A market that keeps going south, okay, very well could turn around and put the kibosh on the fastness of the Fed going up on rates. And if that's the case, then you are going to see the dollar go down very quickly. You're going to see the metal go up very quickly. And that's outside of the aspect, what I think of one of the wild cards to me inside the gold market is this. Europe is trying to figure out a payment system. You might have heard me say this yesterday, well, even Monday. They're trying to figure out a payment system so that they can do business with Iran. Guess what, folks? Some of that's going to be gold. Not all of it. Some of it's going to be gold. There's going to be a bid under gold. And that's where this is going to come from. It's going to be controversy. There's going to be a million other things. Bottom line, you know, that's already in place. So I suspect that is where the real bid's going to be caught. And if that's what happens, hold on for the ride, because then you are going to see a ride and a half. Because then, by mistake, you have gold as a real currency. You know, gold's always been a currency, but guess what? If, in fact, Europe decides they want to get around the sanctions, And that's how they're going to do it. It's easy to do, man. It's not a big deal. 877-927-6648. Dow's down 670. S&Ps are off 80. Nasdaq's down 264. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now down 700. You get the Nasdaq down 283. S&Ps are off 85, and you only get a few minutes until they're closed, folks. But this is it's ugly, but it's I suspect it's going to get a little more ugly. You get the S&Ps are down 2.6%. You get the Dow off 2.7. Nasdaq is down 3.7. The composite, it's pretty amazing how fast the NDX 100 as well as the composite can go south. And this was a big move. There's no two ways about it. The composite also just broke its 200-day moving average. And, you know, bottom line is that it's not something that I look at a lot. But what does happen is that when you break major trading averages like that, that lots of folks look at, folks, bottom line, it just accelerates the selling. That's how that baby shakes out. Because what we've had in the past is that when they come down to those levels, you come down to those levels, guess what? That's where the dip buyers come in, and the dip buyers were coming in today, and the bottom line is that they were getting burnt. The real question is, I just hope that they don't hang out overnight, because bottom line is that this thing is not done. And you can see right now that trend is not high enough to get a bounce going. You're at 1.08, and That's want to hear something crazy? 1.22 was the trend yesterday. So there was more fear yesterday than there is today. That is what is absolutely amazing. And when you have a market like that, that is not a market that is making a bottom. When you're making a bottom, folks, okay, everything gets thrown down the toilet. Everything, okay? And then the expansion of the trend, the expansion of the tick goes up tremendously. It's fast, it's furious, and then boom, just as quick, the turn comes in. And we're not, you know, my take, we're not even close to it because we haven't even got a 2 minus down ticks. You got, if we take a look at this, let me see actually when it was, when the first one came in. So we got, there we go, we just got a second one. This is pretty cool. Okay, so we just got a minus 1,500. We get the first one coming in at minus 1497. Okay, that's pretty good then. At 10 past 3, we just got the second one at minus 1,500. That's a good scene. You still need a rejection of price, but that's a start. Stay right there, folks. Come right back.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But yeah. Holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrials down 831. NASDAQ down 315. S&P's down 101. Percentage-wise, folks, big numbers numerically as well as percentage-wise. We had the Dow Industrials trade down 3.1%. NASDAQ down S&P's down 2.7%. NASDAQ down 4.1%. Monster numbers. All with volume. Gold contract up $5.40, trading $11.96 an ounce. Silver down 7 cents, $14.32 an ounce. Light sweet crude off $2.12, $72.84 a barrel. Oil came down with volume. We're going to get lower prices. Heating oil, gasoline, distillats, all of the above. Notes and bonds. You have the 5-year, 10-year note up 5 ticks, 117.31. 30-year bond flat, 137.22. King dollar down 151 ticks. Couldn't hold price, 95.195. The euro is trading at 115.23 to 1 US dollar. The yen is out here at 112.5 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a market that got smoked. Took out the B point, took it out with volume. You get ABC structures all over the place on the way down. We take a look at the SPY bottom line in 6 hours just brought it all the way back to where we were on June 11th. We're 278.28 in the SPY. What I expect we're going to see here is that the SPY is going after the high of its high volume low. The high of that is 275, folks. And what I do expect we're going to see here as we're going through these markets, this market is going after the February 9th high volume low. That's what the baby's doing. And you get volume as you're coming down after that. NDX 100, the 3 Qs. What do you have inside the 3 Qs? Same type of setup. 3 Qs basically blew it out. 100 million shares, 109 million shares. The ABC structure on the Qs. Price projection, $170.42. You're at 171.73. Bottom line, we bring this back, set it up, and what you're going to see here, the high of that low is 165, and I expect we're going to go there. IWM, the small caps, which led us down, that little baby jumped the creek today, jumped its 200-day moving average. This was the largest ABC structure on the way down. You did 44 million shares. You're taking out your swing point with 31. Right now, the IWM is at 156. Your price projection on this is 151. So this baby's not even close to being done. And that's with the IWM being down $4.60 today, which is pretty intense, man. It's really intense, actually. If we take a look at the high of the low of the February time frame, you're going to see we're right next to it right now. That high of the low is 153. And bottom line is that this February swing low, folks, is quite a way away from, if we go to the S&P again, if you want to see the low of this, this is where this gets really dicey. And get stops in if you're in this market, man, because when you pull this back and see where this is, it's pretty scary. We're at 156. The low, the high volume low is 142.50 inside the SPY. And bottom line, that's where we're going. You know, what happens with high volume lows or highs is this. The high of that can save it, and we'll get a good idea of how it hits that high. Bottom line, we'll see how it happens. We'll leave it at that point. What we don't have out here today is this. You're nowhere near a bottom. What you did have is that you had a lot of energy that was used. There's no doubt about that. Coming into the close, you finally had some selling. We got the trend up to 1.41. And what we also did is that we did get a couple down ticks. We got a minus 1,500 coming into the close, which is good. That's what you need. And then we had got a minus 14.95, I believe. Yeah, 14.97. So that is also a good scene. What you didn't get, and what you get when you start trying to make it into a bottom, is you got to get a rejection of lower price. And that isn't on the table. Gold contract. What are we looking at gold? Bottom line, gold held up. The gold equities are probably the only thing that was up out here today. In fact, let me just look at something. It's pretty wild, actually, because if we go into the Dow Industrial, yeah, every single Dow Industrial stock is in the red. If I put this up, if you're watching Tiger TV, every single one of them. And you're talking about monster numbers, too. If we go into the NDX 100, we take a look at the NDX 100. We have 3 stocks out of 100 that are in the red, that are in the green. You have Dollar Tree is up $1.37. You had Vodafone up 24 cents, and you had Dentist Supply up 15 cents. That's pretty intense. Out of 100 stocks, only 3 of them were in the green. So that's pretty intense. That's insane, actually. Notes and bonds. Let's go take a look at the note and bond market. What do we have inside the note and bond market? 10-year note. Oh, this is a good market. This looks good. Okay, so bottom line is that you have the 10-year note up 5 ticks. We did 2.3 million contracts. It's a monster contract volume, folks. Bottom line is that you're going to see higher price, and I suspect we're seeing this bounce because of the fact that the market is so low. We'll see whether this can make it up to the 118.31 area. Right now, you're at 117.31. If we take a look at the 30-year, see how this 30-year is set up? Yeah, 30-year is good, too. 30-year is still -2 for the day, but we were down at 136.29, and you're at 137.22. King dollar, bottom line, king dollar, could not hold higher price. Pretty amazing, actually. Sells down. Doesn't have a lot of volume, though. So you're not in the lower range yet. We did only 19,000 contracts. That's light contract volume, folks. King dollar is going to have to do about 26,000 contracts and simultaneously get inside this 95.07 mark. That's the kind of the number. 95 to 95.07 is the number to keep your eye on. Dow Industrials closed down 831. Nasdaq down 315. S&Ps, then they're closing up, man. It's a monster move in the S&Ps, down 107. Coming right back, folks. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials finished down 831, Nasdaq off 315, S&P's down 107. They're talking about monster numbers, folks, right across all these indices. Let's go over to our man, Mr. Jim Prince, as we do each and every Wednesday at 20 past the hour. Don't forget, folks, you can find Jim every trading day at GBE Business gbemembers.com, greatestbusinessonearth.com. Jim Prince, what's going on?
Wow, what action today, huh, Tom?
Oh, baby. There's no doubt. Volatility in spades, huge selling. You get ABC structures down all over the place. They're breaking swing points with volume. Elevator's never big enough to, you know, when people want to get out, Jim.
Yeah, no kidding. I'm just looking here. The the NASDAQ futures look to be down almost 5% on the day. Pretty big move for sure.
Intense, man. The NASDAQ always blows my mind. And folks have heard me say this so many times, but, you know, it can crawl up. And, man, when that falls apart, it just tears, folks. When they want out, they want out. So I got some of your charts up. Let's take a look at it. Where would you like to start?
Well, you know, I thought because of all the action, you know, the stock indices, some of the currencies, and the energy is pretty well covered today. Let's take a look at a couple of markets that we normally don't talk about. How about we'll look at the weekly feeder cattle chart to begin with.
Okay, perfect. November feeder cattle. Let's see. Oh, I got it. Beautiful. Okay, cool. Okay.
Yeah. Yeah, so the weekly chart, is that the one you have up, Tom?
I do. I believe so.
Oh, okay. Excellent. Yeah, so I've highlighted on that chart that red zone, that resistance zone. It looks like a triple top spread out over you know, the last year or so there, and the market just tapped that, and also the 200 period moving average is right there as well. And coming off of that, and you can see how the market's kind of pulling back into that, just above that green zone that I have marked there. And it's done all of that on divergence. So I'm looking for the market to maybe push lower here. If we zoom in or take a look here at the November feeder cattle, I think you can see things a little better.
Okay. There we go. There's the November.
Okay. Yeah. So you can see prices sitting just above the green zone there. And then I put one of my ellipses there, which really runs from the bottom of today's candle down to the support level there, that blue line, as well as the 50-period moving average. So I'm anticipating that with the energy I see in the indicators there, we should see some lower prices here. We may not see it right away, but I think over the course of the next week or so, we're very likely to see some lower prices here. And again, the divergence here on this daily chart stood out pretty well, and price really dropped off of that divergence.
Yeah, you know what's interesting, too, is that, you know, folks, if you've never traded cattle, cattle's pretty cool. I traded cattle quite a bit. Like the moves are fast, even intraday. It seems like they just sit there, and then whatever way they're going to move, they move. But I like that. It's so intriguing looking at cattle at the over the dollar mark, because when I was trading that a lot, it would always be basically revolving around a buck. You know what I mean? A buck to a $1.06, which is pretty wild. But yeah, you know, pretty cool. What are we going to look at next?
Let's look at wheat. We have the 10-year cash contract.
Okay.
I have the historical data there for that. And one of the things with that is that you can see that blue line. That's the one we kind of focus on here.
Yes.
It tends to bottom in September. So, you know, we're at that time of the year where we should be looking to bottom here, and actually have surpassed it a little bit. And now if we pull up the March wheat contract, you'll see that prices are really actually just consolidating here at the moment. I have outlined the consolidation, more of a triangle pattern.
Yes.
And below that, I have a couple of support zones. So I'm thinking here that based on the seasonal, because we're really not doing anything quite at this point. I mean, the market did actually put in a low there mid-September. That's kind of the low there in the triangle, that if price rolls over here, that we're going to come down and test these different support levels on the chart. That horizontal line will, of course, be the first line in the sand. And below that, we got that whole green zone. That will be obviously counter-seasonal at this point if that happens. So if the support holds, then I'm looking for the market to kind of bottom out and then begin to kind of turn the corner.
Okay. Hey, did you see the? I mean, I was hearing yesterday that in China, they have. I think they said that 400 million pigs. They were thinking that they were going to basically. I guess they have a regulation that you have to feed them so much protein, and they were thinking that they were going to change that regulation because of the fact that China themselves had put a tariff on our soybeans, you know, so that's going to be intriguing to see how that shakes out.
Yeah, that will indeed. I don't know much about that, unfortunately, but that will be interesting to see how it affects the market for sure.
And you can see when you're looking at beans, folks, the bottom line is that beans have gone from $10.50 a bushel to $8.52, and this still just can't seem to make a low, man. So
yeah.
It's gonna be pretty wild watching that thing shake out. The coffee, right?
Yeah, the last market here today. So we talked about this about a month ago, and price had just made that little doji candle there inside that green zone that I have marked off.
Yeah.
And then you can see it pushed low and kind of formed this asymmetrical head and shoulder bottom pattern, and just took off like a rocket ship here, and now is at the resistance level. So we looked at coffee. We talked about the seasonals before as well. Price does tend to move up here into the cold season, if you will, because more coffee is consumed, I guess. But I'm looking for the market to pull back a little bit and maybe really starts a trend. I think this is more of a spike type move into resistance, and if that holds, the market backs off a little bit, then look for more of a seasonal type of rally in this market too. Yeah,
no, that's pretty cool because fundamentally that adds up with Brazil and the real too. I mean, what you had, folks, is that election in Brazil, whether you like the person, don't like the person, the bottom line is that you had the real come off the lows, which it had to do because that had been getting so weak. I mean, we were at 4.2 reals to $1 US. Now you're at 3.75, and that's what they need for that commodity market, man. And I mean, we should have got down to Brazil earlier, Jim, and got ourselves a nice coffee ranch, coffee plantation, and some cattle.
For sure. Then we could have said it was real low.
so true. Hey, listen, it's amazing what has happened with these currencies, man. It's made such a difference, folks. I mean, the currency moves, for these commodity countries have been pretty intense, and
Indeed. Yep.
Makes a difference.
In fact, the U.S. dollar, Canadian dollar, what a big move in that pair today. Up about 0.75%, but a bigger turnaround, I think, and a big rally. We had the Euro CAD up really big as well. So yeah, you're absolutely right. Big currency moves.
Unreal. Well, listen, folks, every trading day you can get over, check out Jim. It's gbemembers.com. Greatest business on earth. You can listen to him here every Wednesday, folks, at 20 past. So, are you liking the fall?
Oh, I love the fall time. I love baseball. Of course, the Red Sox moved on last night. That's fantastic. You bet.
That was a good game. That was. And, of course, down in Florida, we get lots of Red Sox fans and lots of Yankee fans. So, in the bars, it's always pretty wild, man.
I bet.
Cooking, brother, thanks so much for the help.
Oh, yeah. Have a good one.
Have a great one, Jim. Stay right there, folks. Come right back. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum,
copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Some of the high-volume stocks out here, and guess what, folks? If you're taking a look at this, you're going to see every single one of these high-volume stocks, the top 24, except one. JCPenney is up 11 pennies. Bottom line is that everything's down. You have Advanced Micro down $2.24. Apple was down $10.50. You had Cisco off $1.86. Facebook down $6.50. Let's go take a look at Facebook. Facebook is making its way back to that 149 area. Let's see. Yeah, so well, there you go. You're 151 right now. We pull this back. You're going to see that 149 sticking out like a sore thumb. 149.02. And, you know, if we break that, then let's see. We break that, you're going to... Oh, boy. Yeah, this is going to be intriguing, man. If you break that 149 in Facebook, 149 to 147, then you're talking some major destruction. You're talking like, oh, man, like $63. That'll be a mind blower, man. But that's where that's at. That's intense. Now, what did happen, I want to thank the Tigers inside the den, Tigers and Tigresses. So at the close, folks, this is kind of interesting. You know, when I first did the numbers, you know, we were talking about the note market and the bond market, and they both look good, but you can see that the note market was only up 3 ticks, and the bond market was down 3. Bottom line is that you get buy-in inside both of these, so someone is loading up right now, because this is very unusual after the close, okay, because, you know, the futures are open, okay, but after the close, this thing just went to the moon. Well, not to the moon, but you're up 10 ticks, and all this buying is coming in. Bottom line is that after the market close. So right now, the 10-year is at 118.03, and what you do have is this. You have wide price spread. You have volume behind the move, 2.4 million contracts. That's big contract volume. And that's saying that it's going to have a shot to basically break ICE. ICE is at 118.14, only 10 ticks above this. And what ICE is that's where you break down from, and that's where we definitely broke, and we broke hard inside the bond market. We'll see whether it's more than a counter trend bounce. More than likely, it's just a counter trend bounce. But that is what normally happens if the markets are going south. You know, this is a very fast move. People are going to be very upset when they start basically hearing this when they get out of work tonight. You know, we happen to be in the markets all the time, but, you know, that's probably only 1% of the folks in the country, basically. You know, there's plenty of folks with the IRAs, with their investments, you know, and by now, in the next couple hours, they're going to have to be making some decisions. We take a look at the 30-year up 9 ticks. This had pretty good price spread, has the volume behind the move. This could go up to 139.03. That's how that baby is shaken out right now. So you're talking about some decent numbers out here. If we do go look inside the NDX 100, NDX 100, the losers out here, Netflix was down 8.3%. You had NVIDIA down 7.4%, Intuit was down 7.3%, and Align Technologies was down 7.3%. You're talking about just monster numbers. And if you want to see a pullback, something that basically hits a high and pulls back, holy cow. Square. Square has been on a tear. 5 months ago it was at 43. 8 days ago it was at 101, and that just went down $26. And now we get volume. It's breaking lows. It's an ABC down. Let's see, is it 30? That's, yeah, it's as close as you can get. It looks like it's going to be an ABC structure on the way down. Big numbers. The SMHs, you take a look at the SMHs. SMHs got hit hard today. The SMHs also going after the high volume low of February. And we're right next to it at the SMHs. What you're going to see is this. We're at 96.30. The high of the high volume low is 93. No. Oh, it's already into it. Yeah, we're into this big. So the high was 103. The low was actually 93.88. So the SMHs are right next to this high volume low. Now, what you want to do is this. You're going to want to look at these high volume lows, because what we're going to get a glimpse at is just how low this correction wants to go. Because if we start breaking these high volume lows, then it's a huge problem. Because we went up so fast, folks, from 2016, there's not another floor here. This high volume low from February is the floor. And it's a solid floor. But guess what? Solid floors can get whacked when you come down with volume like we're coming down right now. If you go take a look at the diamonds, I believe, this is the Dow. The diamonds are right at DIA. I believe they're already digging into this number. Maybe they're not. Yeah, no, they're digging into it. Okay, so the high, look at that. We just tapped it. No, we didn't tap. We were 80 cents away from it. So the diamonds were 256. The high is 255. The low is 233. 233 is the number. Big number. If we do look at the indices, what you have inside the major indices, folks, the S&P, the Dow, the NASDAQ, small caps, they're all in a confirmed ABC structure on the way down. You know, so an ABC structure on the way down goes like this. A to B equals C to D. It blew away its B point, did it with volume. If you want to understand how those work and you don't, just go over to Amazon, get my book, The Art of Time in the Trade. It's all in there. You get a market out here, folks. You get a market that the funds wanted to get out of very quickly. There's no such thing as getting out of markets quickly. The SPY right now is trading 278. 275 is the high of that low. The low, and this is what's really dangerous inside the SPY, the low is 252. That's a big number. And, you know, the way that we're trading right now, what we did do is that as we come into the close, we got the trend up a bit, which it needed. We're at 1.41, so there was some fear coming into the close. We had the tick, down tick, that we got a good little down tick, minus 1,500. That's a good down tick. And what that specifically means is that you actually did get some selling as we get into that. My take is that you're not going to get a bounce out here tomorrow. This is where the danger point comes. This is what it is. What Wednesday? If in fact we get some selling tomorrow, then it's really dangerous, because what happens is that people are going to have to make a choice coming over the weekend, going into a Friday, coming into the weekend, and bottom line, as I said a little bit earlier, I think what you're seeing out here, more so than anything, is that you're seeing large funds that they've been up. The bottom line is that you get a fast and furious market going down. The real question, do you want to save you a year and just sell? Because they can still sell and save you a year. If this thing if we have 2 more days of this, guess what? This market's not going to be up for the year. All these folks that basically are paying fees to their managers are going to say, hey, you know, we were up 7, 10, 15%. All of a sudden, in a week and a half, we're flat. What's going on? That's what you're seeing right here in this market. That's why I suspect it's so fast and furious. Have a great one, folks. Have a safe one. Stay right there. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. You know, as Mr. Jim Prince was saying, folks, there's no doubt the NDX 100, that took the biggest hit. Now, you know, we're at October of 2018. The last time the NDX came down this much has to go all the way back to 2011. That's pretty intense. If we put this on a weekly basis, what you're going to see is this, and this is where the danger point is extraordinary. So, high volume lows, high volume highs. Bottom line, they'd love to be tested. You know, I've been doing this a long period of time, and you know, the art of time in the trade, it's price and volume. That's the whole ball of wax, with the Fibonacci sequence inside it because of the Gartleys with the swing points. Bottom line is that once you start for high volume lows, particularly after we've already had many sectors actually hit that high volume low, folks, and those are the sectors that are going to be in better shape than the ones that haven't. So what happens is that you want to know where they are, number one, and number two, then you got to guard. You know, you got to put up your guard, because the bottom line is that they're going after them. Now, if I take a look at the NDX 100, what you're going to see is this: the high of that low is only 200 points away from where we are. Actually, 150. And 150, that's 6, 7, 163 to be exact. And we went down 327 in one day. The low, which my take is that that's what we're actually going after, is 61.64. That is a monster, folks, okay? If we take this and you basically, let's put this on a 5-year. If I put this on a 5-year monthly, what you haven't done yet is that you haven't broken the monthly trend. You know, bottom line, on a monthly basis, it doesn't look like anything's happened. If we take this and then we're going to put this on a weekly, bottom line, you can definitely make the case. I'm going to get this closer. On a weekly basis, what gets kind of wild is this, and this is really, I've seen this before. So on a weekly, it goes like this. If I take where we were in November of 2016, and you actually take the trend line, I got to make this cleaner. Okay, we take the trend line. This is what you're going to see. This is pretty wild when this happens, and you know, this is a classic. We never got above. When you take a look at this break, whoops. Well, anyway, we broke the trend in February, okay? Then what you had happen is that it jumped on the other side of the trend again, meaning you broke it in February, you broke it in April, you got back on the other side of it, and what we just did now is that we came back inside and broke the trend with a vengeance. And conviction is wide price spread, monster volume. That's what you have. So your probability goes much higher that that's where you're going to go. If we go look at the small caps, which actually let us down, I suspect what you're going to see there is that this is going to probably be cleaner, meaning that you'll see the break. Yeah, see, there's a monthly break in the small caps. This is serious business. So in the small caps, what you have, yeah, you get a huge monthly break. So the small caps have a huge monthly break. And if that's the case, then it's big trouble, because what you're going to see is this. First off, you know, we'll see whether, so high volume lows. Talk about this for a second. Because the good news in a high volume low is that it presents huge amounts of support when, in fact, you get volume before you're coming into it. And that's what we have. So thus far, this we have. Doesn't mean that it will hold. As we go through the next couple of days, you'll get a better understanding, because this is what you don't, if you're a bull, this is what you don't want to happen. What you don't want to happen is us to go sideways right now. If we start going sideways, that's going to be building cause to blow away the high volume low. If you're a bull, what you want to happen is that you want to go after it right now, because what's going to happen is that the market's going to get way too tight. It'll go after it, it'll test it with lighter volume, bang. That will be the consolidation. It would be a big consolidation. That's how that would work. And it's a monster consolidation. If you don't get that, and the market has a chance to go sideways for 2, 3, 4 weeks, big trouble. That's the building cause aspect, to build more energy to basically blow that through. Because what you do have out here today is that the market took a huge amount of energy to do what it was doing. And you're going to know pretty quickly. If we go overseas and we take a look at overseas, it doesn't look good at all. You know, if we take a look at the DAX in Germany, that had broken all its major averages over 2 weeks ago. We take a look at the FTSE in the UK, that also broke its averages last week. You know, so this is a worldwide phenomena, folks. So the bottom line is that we're in a one-world deal. Money shifts. It goes really fast and furious. You can see after the closeout here, it's really intriguing, man. They're buying the bonds. Bottom line, gold is getting basically a bid. And that's a little bit different than the last time. And I can see how this can get a bit different, because guess what? There's still plenty of funds that have to be in something, you know. So what happened in the gold equities today is that they caught a bid. So what's going to be really intriguing is that, you know, it doesn't take a huge amount of buying inside the gold market for gold to go in a big way. And the real question is going to be if, in fact, will that get back on the radar of managers, fund managers in general, saying, okay, I got to be in something. These other stocks are going to get killed. Gold has got killed since last April. Bottom line hasn't done a thing. Well, guess what? You very well could get some buy-in inside of them. We got it today. And when you take a look at the market in general, the only green that you see on the screen, just about anything and everything that I put up, is inside the metals market. You know, if I took up, I put up the highest volume equities out here, it's pretty wild. Freeport-McMoRan, which hadn't done anything. Bottom line, you know, that was down. But other than that, you can see I got a gold screen up right now. Out of 24 gold equities, you get one's down a penny, another one's down a penny, another one's down 4 pennies, one's down 41 cents. Now, here, I'll show you something if you're watching Tiger TV. This gets really crazy. So, you're looking at all the green. Now, watch this. I turn around and I put up the Dow Industrials. There's not one piece of green. I turn around and put up the S&P. There's not one piece of green. I turn around and put up the OEX, which is the 100 S&P, not one. I turn around and I put up the mid caps. You get 2. Penn National's up 34 cents. You get Bed Bath & Beyond up 5 cents. And then I turn around and I put up the Russell, not one. So that says quite a bit. That's the bottom line. And if you haven't test driven the Gold Report, or actually, we have a new website. So if you want to test drive the Gold Report, you can. Come over to our website, go under a featured content. It comes with a 30-day money-back guarantee, folks. And it doesn't matter whether you have test driven it before, because we rewound everything with the new website. We got a new database. So you can go over there, test drive it, 30-day money-back guarantee. Dow finished down 831, NASDAQ up 315, S&P's down 111. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Jason Path has just launched launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So percentage-wise out here, big percentages, folks, big volume. Dow Industrials was down 3.1. You had the NASDAQ down 4.1. S&Ps were down 3.2. You get overseas, and we take a look at the Nikkei. The overseas tonight is going to have a tough night, folks. Nikkei right now is at 2,300. I expect that thing is going to be basically diving down to somewhere into the 23,500. Looks like that's going to be trading down to that 23,000 mark. So big number. We go into now China. And the Chinese markets have been in a tough shape in a huge way. Anyway, you know, you get the Shanghai. If we pull the Shanghai up, the Shanghai is trading out at 27.25. That's 2007.25. That is off a high of just 6 months ago of 3,200. And if we pull this back a bit, you're going to see it's actually off the all-time high of 51. You know, so that thing's already got cut in half. And I expect you're going to see this is going to go after the lows of 2016, which is 26.38. Bottom line, is going to make a difference in our markets tomorrow? Yeah. I don't expect we're going to basically get too much of a bounce out here. In fact, I don't expect a bounce at all because the way that the bond market is trading right now and the way the gold market is trading right now, traders are coming in after the market closed. Futures are basically getting open again. They're buying bonds. They're buying notes. They're still selling the S&P. You know, we'll see where this dollar is going to shake out. But it's a large downdraft. There's no doubt about it. We take a look at the volume. Volume on the NYSE hit 1.1 billion, and on the Nasdaq Composite it was a monster. Nasdaq Composite did 3 billion. And as I said, what's going to happen tonight, which is going to show up on machines, is that you get the Russell 2000 broke all its major averages. Now it's under the 200-day moving average. Composite also did it. It's a big problem. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking right back here. Join Jason, 8:30 in the morning. Morning market kickoff. Great program, great newsletter. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.